Good evening. I make that past, so let's make a start. Welcome everyone to this meeting of the Finance Committee on this fine September afternoon. Welcome to you all. Just before we start with item 1, I would just like to take a moment. Councillor Gann was on this committee. I don't know if we saw him. Obviously, but I would just like to take a moment. Out of respectful silence, if that's all right with everyone. Thank you. Welcome again. Let's move straight to item 1, apologies for absence.
Councillor Podger is substituting for the late Councillor Gann.
And we've had apologies from Councillor Hock as well, who is attending his niece's wedding. So congratulations to his niece. Item 2 then, public questions and statements. Have there been any?
None received.
Thank you. Item 3, councillor questions and statements.
None received.
Item 4, minutes of the previous meeting. We all content? Fantastic. Thank you. I will sign those at the end. Declarations of interest. Are there any interest to declare? No, thank you. Item 6, dispensations.
None requested.
Thank you. And then straight to item 7, chair's announcements. No real announcements to make from me other than obviously we are starting on that process of setting the budget, which is obviously relevant to this committee. There have been several well-attended drop-in sessions ahead of that, and I believe that there will be further meetings in the pipeline for any and all interested parties. So, right, item 8. Budget Monitoring Report 25-26. Steve Bishop, over to you.
Thank you, Chair. Good evening, councillors. I'll take you through the report because there's a few new councillors on this committee, so it's good if we can all sort of start from the same base level of understanding. So apologies for those of you who've seen lots of this format of report, but we'll quickly try and go through. There is a question in tonight's report which is asking how you want the format of reports coming to this committee to be in future. You've got sort of two options. There's the full council report, because you're the finance committee. It doesn't prevent you from seeing the whole of the full council's report that will come to full council. You can look at that, or you can look at purely those cost centres that relate to the finance committee. And I'll take you through those two options as we go through the report. So the report summary, as set out, it's in the financial regulations of the council for committees and for full council to monitor the budget, in addition to officers monitoring the budgets too. The report format throughout, any numbers that are red and in brackets are good, in the sense that they're either income or they're underspends. Any black solid figures are bad, in the sense that they're usually expenditure or overspends. So moving straight to section 3.3, taking you through each of the 4 appendices. Appendix A, if we spend a little time on Appendix A, that is a split of the cost centres across the council. As you can see, I think 2 years ago we had about 20 cost centres that covered the entirety of the council's activities, and now we're up to about 70. And they're split by committee according to the committee's terms of reference. So this is obviously hot off the press after full council approved changes in committee duties and committee titles. So as you can see, the Environment Committee now contains all of the activities of the Environment Department, which total in expenditure terms in Appendix A, as you can see, 4.7 million, which nets down to 2.5 million roughly. for all of those cost centres. Commercial Services Committee now looks after all of the cost centres that the Business Operations or Commercial Services Department, led by Matt, are responsible for. So there's almost 1.7 million expenditure represented in those cost centres. That nets down to 800,000. Community Services Committee now looks after all the cost centres relating to the community department. So there's net budgets there of £500,000. The Governance, Policy and HR Committee has now taken on a lot of the cost centres that used to come to the Finance and Governance Committee, as this committee once was. So the Precept, for example, oh, by the way, I should say, I do apologise. The very first line under Governance, Policy and HR Committee, because you're not seeing necessarily the colour versions of this, you're not seeing a white font on a black background, which is why it looks invisible to you. So I do apologise for that. That missing narrative should read EST, the cost centre's EST, which is the CEO's department, and Precept. So that's why there's such a large income target on that line. 5.9 million is the council's Precept that goes to that cost centre. And then all the other cost centres that give a net figure of 4.678 million that committee looks after, which then leaves this committee with two cost centres, which is the Finance Department's cost centre, as we'll come to shortly, and the Public Works loans that the council's taken out in the past. So that's £747,000 net worth of budgets that this committee is directly responsible for. But as I say, one of the recommendations for you to consider as we go through the report is to consider whether you're content in future to only look at those two cost centres in detail, or whether you'd wish to see the entirety of the council's budget monitoring. And with that in mind, that's why Appendix B gives you the entire June end budget monitoring information for the whole council, in case you did want to look at the entire full council position. So just briefly taking you through that, obviously it's in those same department orders, so those same cost centres are split in those ways. You can see there's a few cost centres that have been deleted, but there's many more cost centres that have been created. And as in the body of the report says in 4.2, there's 5 additional cost centres in the Environmental Services Department that reflect not just what the officers have asked for over the past few years, but also what you councillors have asked for, which is greater transparency in certain services. So allotments used to be, I think, lost within the Parks and Open Spaces cost centre. Now it's going to have its own cost centre. So you'll be able to see the income and expenditure relating to allotments on its own. Car parks has been separated out. Camping and caravan site, because it's a large income source, has been separated out. The depot, because it's a large building asset and used to be spread across various cost centres, that's now going to have its own cost centre. And the pavilions that are in our parks, it was useful for also to be able to capture all of the costs and income relating to those. The Commercial Services Department has got 3 new cost centres. Shop Mobility has been split from the Customer Services, the CSR cost centre, the Information Centre. They're now 2 separate cost centres. Communications has got its own cost centre to separate it out. It was fairly lost within the MEV Markets and Advertising cost centre, so it's now separated out. And another cost centre devoted to a single event is the Mela event. That's been created as well. For community services, there's one other cost centre where the Friary used to be lost within the Bemerton Heath cost centre. It's now got its own separate cost centre as well. So going back to Appendix B, those asterisked, it's got all of the new cost centres in there, and the old cost centres that we no longer use have been struck out. The asterisked cost centres, which are in the Commercial Services Department, are those events. They're single purpose event cost centres, and we haven't got round to those yet. So you wouldn't expect to see an awful lot of activity on those cost centres, but it's to give you some perspective. So if you're wondering why there's lots of zeros, clearly those events to do with Christmas haven't really started yet, or there are a few transactions coming through there. So Appendix B splits down the council's June end performance, going through the columns again to make sure everyone's aware of what the different columns show. The first column of figures, full year budget before adjustments, are those budgets that council approved in January. The full year opening budget after adjustments are where we've created those new cost centres, so we've had to move budgets around. And it's also where there's been environments in accordance with financial regulations where the budgets basically were in the wrong place, so we've moved them around. There's a full audit trail if councillors are ever interested in seeing those environments. And again, under financial regulations, the Chief Exec Officer is able to carry forward certain budgets from the previous financial year that have been unspent if those activities need to be completed in the following financial year. So there's a few extra budgets that have been brought forward from 24-25 into 25-26. So all of those adjustments have been made in that second column, which is why the bottom line figure is slightly different to the first column. Because we're looking at only part of the year, it would be misleading for you to compare the June end actuals, income and expenditure, with a whole year's budget. So the third column of figures is where we take the full year's budget after adjustments, and we just profile it down into what we would expect to have spent or earned by the end of June. Ordinarily, that's just 3/12 because most budgets are profiled in 12ths over the year. But where budget holders have got a much better idea, where there's a lumpy cash flow. So, for example, if we paid all of our insurance premiums in one payment in April, then you wouldn't want to show the budget split in 12ths across the year. You'd want to show that all of that budget would expect to have been spent in April, and you'd be comparing that budget profile with the actual for April through to June. So that's why the profile budget, if you do the sums, is mostly 3/12 of the annual, but in a few cases it's different, and that's where budget holders have made an exceptional budget profile. You've then got the most important column to me as an accountant is the actual net expenditure and income for those cost centres, the fourth or penultimate column. And then the variance column, the all-important one, is where we are comparing the profiled budget with the actual to say, good or bad, are we ahead of budget? Are we behind budget? And once again, to remind you that if it's a figure in brackets, that's a good, healthy variance. It's either where we've underspent expenditure or we've overachieved income. If it's a black solid, then that's less good news. That's where we've overspent an expenditure budget or underachieved an income budget. Because you're seeing this a whole cost centre in each row, each cost centres can have up to 50 different income or expenditure accounts. If you quickly flick to Appendix D, where you've got a full cost centre, it's not that representative, but the finance cost centre, you can see all that level of detail, salaries, software licenses, etc. So Appendix B is just netting off all of those income and expenditures, both budgets and actuals, for a whole cost centre, and giving you a variance across the whole cost centre. So quite often that single figure variance could cover a multitude of pluses and minuses, and it's the Appendix D, the more detailed report for each cost centre, that would give you that extra level of detail. But looking at Appendix B, as you can see, each department, if you look at each department total, and in the variance column, each department has underspent in total. Some of the cost centres within departments have slightly overspent, but obviously in aggregate, each department is showing an underspend. And when they're all added together to look at the total revenue cost centres at the bottom, there's a £386,000 underspend across the council as at the end of June. Appendix C, just quickly flit into that. That's what this council used to call the capital programme. It was a bit of a misnomer because most of it was funded not from capital receipts, so it wasn't actually as defined by accounting rules, it wasn't capital. So we've renamed it projects because that's basically what it is. It's where we've created a special Z cost centre to define a temporary activity at the council, which will only use for a few years and then it will cease to be used any longer. But it's where you've wanted the officers to capture all the income and expenditure relating to a specific project. So as you can see in Appendix C, there's some Urban Tree Challenge money, and then you've got some projects brought forward from 24-25, namely the Row Barrow Section 106 works and the fixing the crematorium wall. And then there's some new projects, Wyndham Park Wall, Depot Dewatering Bay, Poultry Cross urgent renovation, and Queen Elizabeth Garden Bridges, Section 106. Unfortunately, if you've got it in black and white, I do apologise, because on the screen you'd see all the different colours, and they denote the intention of councillors in January as to where all of these projects would be funded. And as you can see, most of these at the moment are due to be, and this is all up for revision and review as part of your budget setting for 26-27. But as we currently sit here this evening, the plan is that you can see how it will be funded from one or other of the 3 pots of money that the council keeps, not from general reserve. And it's only the bottom line, 6,626, that's going to be funded from revenue, which means either from this year's revenue budgets or from the general reserve, which is all of your saved revenue budgets, underspends that's been accumulated over the previous years. Everything else will be funded either from capital, Section 106 or SIL. But as I say, that's all up for review as part of your budget set, but at the moment, that's the plan. And that's why there's that 6,626 that gets copied across onto Appendix B at the bottom. That's a net revenue cost, so that gets netted off the total of the revenue cost centres, which finally gives you a total revenue position of £380,000 roughly as the underspend as at the end of June. Apologies for the delays. We have got a very archaic, labour-intensive way of producing budget monitoring information, and it takes a month to produce these. And then, of course, there's the committee timescales as well. So I can tell you that the July end budget monitoring wasn't available in time for the agenda papers, but improves this position still further. We're looking at like £426,000 underspend as at the end of July. But you'll see that paper coming to full council in 2 weeks' time. So you can quiz me on the detail then, but it's just to let you know that June end wasn't an aberration. It looks like the same trajectory is continuing on into July at least. And we will be providing, obviously, up to date, as well as we can, budget monitoring reports to each of the committees and to full council as we go through the year. So we'll be able to refine those numbers. So that's Appendix B, is the revenue cost centres performance at the end of June. Appendix C is the projects performance as at the end of June. And then Appendix D is purely looking at those 2 cost centres that are the responsibility of this finance committee, which is the finance department cost centre. So that's where all the everyday activities of my team, the 4 of us, are represented in that. There's still a couple of corporate budgets that in due course will probably decentralise, but like so, for example, business rates, NNDR in Appendix D. We started the year with £314,000. That's the total of our business rate liability for the whole council. £314,000. As you can see, the full year budget as after adjustments only shows 15,795. And that's because we've decentralised the most of that budget across to the various buildings, because finance doesn't have its own building. So that's just the residual left after we've given the depot its business rates budget, the Guildhall its business rates budget, etc. So that was a historically, the business rate budget used to sit in finance, but it doesn't really bear any resemblance to what the finance department costs you. So we reallocated that to the correct place. Audit fees in there is probably the right place. Insurance premiums further up the page, £195,000. That's the entirety of the council's insurance bill each year. 92 still stayed behind, but where I could identify the premium, for example, of the Guildhall insurance, we've reallocated that to the Guildhall cost centre. So again, we're in this process of trying to split budgets and actuals to the place they should go. So you've got a much truer and fuller view as to how much the various services are costing yourselves and the council taxpayer. But we've still got a little bit more to do so that the finance cost centre really does truly reflect what the cost of running the finance team is. And again, to reassure you that the salary costs, the £137,000 a year salary cost is for 4 people. It's not just me, it's not my salary. And the bank interest and treasury management returns is the only income stream we've got, as you can see at the bottom of that top box. And that's achieving its target at the moment, but we'll keep bringing forward as we go through the year. You'll be able to see how we're performing. That's really the only income generator activity that my team does. And then the bottom box shows you the public works loans over the years. The council's borrowed over 20-year loans from the government to do various big pieces of work. So as you can see, it's either crematorium, Guildhall roof, Victoria Park, or the new depot. We have no control over those in the sense that the government, we entered into a repayment schedule at the time we took the loans out, and the government are very clear you stick to that, and we've always stuck to it. There's never been any problem of repaying it, but I think in the past a councillor asked the question, can't we just pay these off early and save some interest? But that's not how the government operates, so we're stuck with those repayment schedules, but they're not causing us any problem. Much more interesting than strategic question, not necessarily for this evening, but is in the future, if ever we got a big outlay, as to whether we'll just go down the PWLB route. So, for example, if the Poultry Cross is going to cost a lot of money, or we need to re-roof the Guildhall, or do any of the really big things we need to do. Another good example is the cremators, I think, need to be replaced at the cost of about £1 million every 20, 25, 30 years. We need to start factoring in that, because it's not within the 5-year timescale of the medium-term financial plan, but it's not long after that. So it might be 7 or 8 or 9 years' time. And as we go through the next few years, that will gradually come on to year 5 of the medium-term plan, year 4, year 3, year 2. We're at the position now where we could consider, do we want to create a sinking fund and put some money in up front, so we've got £1 million by that date, because we can earn money on that money that we're putting to one side, and we won't be getting into a loan, and we won't be paying the government interest. We could do it that way, or we could just not worry about it until the year before and then get another loan out, but then we'll be on the hook for more principal and interest payments for the next 30 years. Again, not a decision for this evening, but you might have been wondering, that cost centre there, PWL, never really gets any attention, but we should be giving it the attention it deserves in terms of the strategic approach to our financing long-term plans. So that's the 4 appendices. Paragraph 3.9 and the recommendation further down the report is really saying, if you could give some thought and give clarity as to what budget monitoring information you want to come to this committee going forwards. I'm getting the impression from some of the nods earlier that you'd rather see the whole full council position, which is absolutely fine. But when we get to that point, if you can give me that clarity, that would be great. Going back to the report, we've got the projecting. So the what if, the so what question is, given all of that is at the end of June, which is only 3 months into the year, what's the year end forecast? And it's obviously very early in the year to commit to a particular figure, but what we can clearly say is that with a £380,000 council-wide underspend, that's a very healthy position to be in, and is very different to where we were last year, when we were worried about the general reserves being so low. We returned an overall council underspend of £520,000. There's some confusion, I think, between what we mean by underspend and what we mean by surplus. So whether you want to look at budgets or whether you want to look at actuals, if you add up all the income and you take away all the expenditure, what you're left with is the council's profit or loss at the end of the year. We could achieve £1 million surplus, but if we budgeted to achieve £1 million surplus, then the underspend would be 0. So some people confuse the two. An underspend is purely looking at whatever we plan to do, and usually this council in the past has always aimed to produce a surplus of about £500,000, because that would then pay for the capital programme, or the projects as we now call it. So you would in the past, we've aimed to produce a surplus of about £500,000 on the revenue side in order to fund all the projecty things. And if we produced a £500,000 surplus as per budget, there's 0 underspend, but there is a £500,000 surplus. So as long as we get that clarity. So last year, for example, we generated a surplus of close to £1 million, but that was in underspend terms. That was an underspend of about £520,000. They're both really good numbers. They're both really healthy, but they're looking at things slightly differently. So anyway, looking at the end of June this year with a £380,000 underspend, we're clearly looking at a very healthy position. It's heavily dependent on the accuracy of the budget profiles. We know what the actuals are to the penny, they're certain, but we're comparing the actuals with the profiled budget. And you know from last year that a lot of our budget variance explanations as officers is you don't need to worry about this apparent overspend or apparent underspend because the budget profile is so inaccurate. And you are getting very frustrated as councillors, which we completely understand. So officers at the moment are going through a really intensive exercise of trying to better understand how their income and expenditure flows occur in their services. So you will see in the coming months a much better improved view of budget profiles. But at the moment, most of the budgets are still profiled in 12ths, unfortunately. So if there's any income or expenditure seasonally that's not in 12ths, that's going to create a budget variance. And you know, it's only through trial and error, I think, that some budget holders and heads of service are going to really understand how their cash flows work and will be able to then inform the budget profile better. But we don't think the £380,000 is all caused by inaccurate budget profiles. Most of it is definitely accurate enough to be able to rely on. So you'll see in the full council report coming in 2 weeks' time, we'll come off the fence and we'll give you a predicted outturn variance. But at this point, just looking at finance, all I can confidently say are those two cost centres you see before you this evening should come in on budget. There's enough swings up and down to make me think that there's not going to be a very material or significant change from what we budgeted for those two cost centres. The other committees, as they receive budget monitoring reports, and then the full council as it receives the whole lot, and the finance committee, if you choose to see the whole lot, we will bring council-wide better forecasts for those committees and for full council. But this is the first of these budget monitoring meetings, and it's one of the smaller committees in terms of the cost centres that we've looked at in detail. So returning to the report and looking at the recommendations, if you could indicate what your reporting requirements are, we'll make sure that from the next meeting of this committee, that's what we'll provide to you in as much detail as you want. And if you could also note the financial position as provided in the appendices. Happy to take any questions.
Thank you. Thank you very much. I want to say thank you for that extremely detailed and thorough report. I think I've said it before, I'll say it again, I'll probably keep saying it. I can't imagine, I find it hard to remember how we ever managed to do anything without these sorts of in-depth dives at each committee. And I think we're lucky to a point that, the overall situation sort of wasn't worse than it, and not that it could have been much worse, but worse than it could have been, given how, in many ways, little information we had about the subject beforehand. So very much appreciate this and all of the work that's gone into it. Obviously, the underspend feels like very good news. I think it's an interesting sort of, one of the big criticisms of local government at all levels is how long things seem to take. But the speed at which the sort of trend has been reversed over the last year or so is, a credit to all of the officers. So I really appreciate that. One question I think from me, just to make sure I've understood, is that I think it's the example that Sven usually uses. For example, are we now there or nearly there at the point where we can look at the crematorium, say, yes, the crematorium makes us money or loses us money? We're at that sort of holistic viewpoint. We're getting there, or we are there.
Yes, Councillor. Virtually all of the big centralised budgets that would affect the crematorium as a cost centre, so salaries and utilities, which didn't used to be covered, but they're all going to the CRM. So if you look at Appendix B, Environment, top of the page, and you look down for CRMs, the very top one, you can see that the actual net expenditure was £82,000. The profile budget is 146,000, so that is a £64,000 underachievement of income. So it's currently April through to June is underachieving. Now, a large explanation for that 64,000, unfortunately, is an accounting adjustment, and this is this irrecoverable VAT, which we will cover if you want, but it's quite complicated. It's through no fault of Neil or the crematorium staff. Unfortunately, it's a legacy issue which we've identified and we're fixing, but it does mean that the budget that was set was based on us being able to recover all the input VAT around. So all of the invoices that Neil and his team pay for in order to run the crematorium, in the past, this council's always reclaimed all of that input VAT and is not allowed to. So we did do a voluntary disclosure to HMRC last year, and we're now putting in place all the mitigations needed to ensure that we account for it correctly, but that wasn't factored in to the budget. So that's part of the explanation that we're having to adjust for the VAT that we used to reclaim. We now have to put it to one side and make sure we pay the invoices in full and we can't claim it back. So that looks like it's a performance issue. There will undoubtedly be some element of that that is down to perhaps underachieving its income target, but that's where the Environment Committee will get the equivalent of Appendix D, which was the line-by-line breakdown, and so it will see every expenditure code and budget and every income budget, and it will be able to see which are the ones that are causing that variance. And some of it will be irrecoverable VAT, but some of it almost certainly will also be an underachievement of income. I think Neil and Mark identified that income was down on what it should be, and that's why they brought forward the fee increases for the crematorium by 1 month. So you may be aware that the crematorium is one of the few parts of the council that increases its fees twice a year, mid-year as well as 1st of April. And I think instead of 1st of October, they've brought the fee increases in on the 1st of September today in order to try and address some of that underachievement. But yes, now, Environment Committee and this committee, if it chooses to receive all of the detailed versions of this, that's a lot of cost centres. But if you wanted to see that level of detail, you could get that more detailed explanation.
Thank you. A very thorough answer. I guess I think that has answered my question that now everything is in more or less in that crematorium line. So we do have that full picture, and I really appreciate that. And then final thing, I think just from me and interested to hear from everyone else, I'm very happy to continue receiving the detailed reports in this committee. I think that's appropriate and correct. Right, I had Ricky and then Sven and then Ted and then Al.
Thank you, Chairman. Thanks, Steve, for a very clear and transparent report. I'm very transparent. I'm going down to the minor details. Poetry Cross urgent renovation. Either we've got a fantastic deal. Is that all we've spent, 2,630, to get the structural support and the hoarding decorated, obviously getting some income from the advertising on the hoarding? Is that all we've had an invoice for? Is that the total? Is there any ongoing costs? Obviously, there must be a higher cost for the scaffold support structure. Could you just explain that line, whether will that increase in the future?
So the glib answer is that's all that's been coded to that account, but that doesn't answer your question. So I can't sit here and categorically say that is definitely to the penny exactly how much we spent. That's what I think we've spent so far. That's what's been coded there. If we spent anything before the 31st of March or committed before the 31st of March, obviously that would go into last year's accounts. But my understanding is this all started since the 1st of April, and that's our sum total so far. But we'll go back and we'll check that we haven't miscoded it anywhere else. In terms of the rent of the scaffold, my understanding, again, I'm not the head of service, but my understanding is that we own the scaffolding now, so there's no ongoing liability for the rental of that scaffolding. But yeah, that's my understanding. Yep. But there will be lots more costs to come, not in terms of renting the scaffolding, but clearly to fix the Poultry Cross is going to cost. Safe.
Stable, safe, hoardings, safe for the public to wander about. That's what it's cost us today.
To the end of June. Again, the other cop-out is that anything in July will be in the next budget monitoring report. But I'll go back and double-check and be able to give this committee by email a fuller answer in terms of whether there's any other costs that aren't on there.
The Wiltshire Council would have charged us 10 times that for putting plastic bollards around it.
Thank you. Sven?
Thank you, Chair. Thank you, Steve. Good stuff. Questions like Weetabix, I have 3. Sinking fund sounds like a plan. Are you going to factor that into the base budget as part of the budget setting process, or is that going to be up to councillors and their individual budgets to decide?
The decision about whether to have a sinking fund?
Yeah.
Yeah, that, I'll raise that in, for any group, obviously the administration, but any other group that's putting a budget proposal together, we'll raise that as a long-term bid, and it's up to then the respective political groups to decide if that's the way they want to go.
Thank you. Crematorium, car parks and caravan and camping site are under environmental in the papers that you've written. Why are they there and not in commercial services? Because they clearly are commercial services.
Right. They're there because it's, at the moment, the committees reflect the department structure. So because Mark Reed, as the head of environment, is responsible for all of those activities in those cost centres, that's why they're there. Yes, if you want to go by the title of the department, then everything commercial should go into commercial and everything environment should go into environment. They're clearly not reflecting that at the moment, but this is the structure that the council has traditionally accepted, but it's up for review if you want.
I think I'd quite like that reviewed for no other reason than commercial services should be under commercial services, I think. Sam, I don't know what's the way to do that.
Yeah, I'm not
Or
sure.
do you want
either,
me to come back and talk to you outside the meeting and say, firstly, do you agree?
Yeah,
Because obviously I'm sort of a lone voice here.
let's have that conversation.
We'll have that
I think,
conversation outside the
Very happy
meeting.
with that,
Okay, and you mentioned sort of capital expenditure and loans if we need some money on big projects like the Guildhall roof or the Poultry Cross. The Poultry Cross is a little project, not a big one, in my opinion. It's a few pieces of wood that need to be replaced and a bit of roof. But finally, let's go back to my favourite topic outside of the CREM, reserves. So 2024-25 base budget, closing general reserve, 427k. 2025-26 forecast, budgeted surplus of 221k to add to that, gave us 648, still not brilliant, but better. 26-27, a surplus of 300k added to the 648 gave us 948, so we're getting that to 1 million, which is good. 27-28 we're at 1.2 mil, and 28-29 we're at 1.9, so all good further down the road. What I would like to see, and I've said it before, is I would like to see into the future at this committee. So I would like to know at this meeting today, what would be, if we did the numbers today, what would be the closing general reserve figure as of, I don't know, end of Q1, for our argument's sake? And what is the forecast looking out towards the end of the year? Are we still looking at 648? Are we looking at 1 million, or are we looking at less than that? And likewise, roll those figures forward for the rest of the medium-term financial plan. So I would like to see what's going to happen in the future rather than what we've done in the last quarter, if that is possible. So my question for this evening is 25-26 financial year. If we did a closing general reserve figure today, what would it be?
Thank you. And just to clarify, because I think Beth was trying to find the figures you were quoting. I think you were quoting from the medium-term financial plan. Yes, so that's not in any of the papers on this evening's agenda. And of course, the medium-term financial plan, which the full council approved in January, was before we finished the year and knew for a fact what we had. And I was being overly prudent in January and informing all political groups to assume that we'd come in on budget at the year end. And of course, we came in hugely better than that. So that medium-term financial plan is the approved position of the council, but everything's got so much better than that because of our outturn at the end of March. So anticipating you asking this question, there will be, this graph comes to every full council budget monitoring report, is part of that report. So it will be coming again in 2 weeks' time to full council. And if this council decides it wants to see all of full council budget monitoring information and more, then you'll be getting this as well. But at the moment, I didn't include it in tonight's paper. So unfortunately, like you put two lawyers together, they'll come up with different advice. If you're two accountants, potentially they'll come up with different numbers. The reason being, of course, without boring you all silly again, about the AGAR-SORP difference, but we're sort of in between two accounting regimes at the moment. And depending on which set of accounts you see, and of course, we're the only council, I think, ever to have produced both an AGAR set of accounts and a SORP set of accounts, which is a fascinating case study for lots of government departments and other people interested in that. It shows what the big difference between the general reserves figure per AGAR is compared to SORP. So in terms of AGAR, our general reserve currently stands at 1.692 million because of us having such a large surplus, unbudgeted surplus at the end of the year, 1.692 million. But because SORP doesn't treat all of these pots of money as income, it quite rightly says you have to put it in your balance sheet for future use. It shows a much lower year-on-year profit figure than AGAR does. So under SORP, in our SORP accounts, we're recording £951,000 is our general reserve. These are figures at the end of March, so the end of the financial year. So a big difference between 1.7 million under AGAR and 0.95 million under SORP. In terms of what the council's policy is, it's running at 1.45 million is what we're expecting to have. And that's what the council set a number of years ago. We slightly modified that policy to say that the RFO has got the duty to keep it at whatever the medium-term financial plan says. But of course, we've beaten that because of having such a good year. So if you're looking at AGAR, we've overachieved our 1.45 million. If you're looking at SORP, which is by far and away the more prudent way of looking at, and the professional way that all of the businesses in the private sector, as well as Wiltshire Council and other big principal authorities do it, SORP says we've still achieved 0.95 million, and we're well on the way over achieving what the medium-term plan expected us to have at the end of last year. But in answer to your question, what it would be if we did it at the end of June, that figure for general reserve wouldn't change because neither officers nor councillors can determine to change the general reserve during the year unless you set up a full council resolution. However, as you've seen in Appendix C, there were some decisions made in the budget last year to say fund some of the projects by Section 106 money, by SIL or by capital receipts. So when you factor those in and you factor in any new money, SIL would change from the 424,000 we showed at the end of March. It would go up by the 54,000 we've so far achieved in this quarter up to the end of June. But we're planning to use £85,000 of it on Wyndham Park Wall, for example. So it goes up by 54, comes down by 85. So that shows a reduction from the year-end figure, but still more than, still £400,000. Capital receipts, 296,000 was recorded at the end of March. We're planning on using 199 of that on funded from those two capital schemes. So that's the depot, dewatering bay and the crematorium wall. So 296 comes down by 199. So we're just shy of £100,000 left on capital receipts. And then Section 106 receipts was £927,000 at the end of the year. And we're planning on using £171,000 of that on Rowbarrow Section 106 works. So we're still in a very, very healthy position, even after using some of it in the first quarter. But that will come to full council in 2 weeks' time, so you'll get to see the figures.
So general reserves as of today under SORP, 951k. Splendid. Thank you very much.
Thanks, Sven. Ted, I think you were next.
I remember in future.
There you go. There you go.
Right, I'm working. What concerns me is that commercial services, as I understand it, should end up producing an overall profit. It doesn't. It's a cost to the council. I would have thought it would be better to set things, when we put out anything under commercial services, that should be those things which we undertake on a commercial basis, where we actually make money rather than lose money. maybe I'm being naive in my thinking. Perhaps our RFO could guide me on that. But having said that, I'm impressed by the way these accounts are produced each time we have a meeting. So thank you, Steve. But as I say, I'd like to have commercial services down in such a way that we know whether they're making a profit or a loss. We just don't know. As far as I see, we're mixing up services to the public and profitable activities or non-profitable activities. Thank you.
Thank you, Ted. Al?
Thank you, Chair. Thanks, Steve. Excellent work from you and your officers, as usual. As the chair of the previous administration's Finance and Governance Committee, I had experience of the previous way of working, and the work you've done to improve the transparency and the logic of the way these accounts work are displayed as makes things much easier for all of us. I think responding to Ted, I think commercial services, yes, with some of these things that are events in the city, these show a direct benefit, but obviously don't show an indirect benefit, bringing people into the city centre. So that's not something which is necessarily tangible to be measured. When Councillor Hocking said he wanted to see in the future, I thought he was about to propose that the council invest in the DeLorean. Obviously, I was a bit disappointed when that wasn't the case. And finally, I think from my point of view personally, I will be happy to see the full detailed finance reports for the council to come to this committee. As this council is responsible for scrutinising the full budget before it goes to full council, I think it's only logical that we see the full budget reports as well. Thank you very much.
Okay, thank you, Al. Andrew?
Yes, thanks, Chair. Echo the fact that certainly the accounts seem pretty clear and understandable, and we're obviously making good progress in improving things. I echo also the fact that I'd like to see the full report. Otherwise, we can't do our job of sort of pre-scrutiny before the full council. I would like to sort of build on what sort of Sven's intent is about more on the forward. I'm just wondering whether we could have more commentary on here. Obviously, at the beginning, you talk about the fact that we've got 380k in terms of underspend against our sort of profiled budget. But I think it would be useful to get at least some words from each of the heads of services to get their view as to what they think happening in their area, even if it's only a short 4-line paragraph or something. I think we should have time to do that if we're focusing on the first Q for this meeting in September. So, and I agree, I think we've agreed that despite the fact that we might only have to submit AGAR, everything, our whole mindset should be SORP. And I think we should just take that as read rather than debating it every single time now. I think the commercial services should sit as to what sits under the commercial services head, because that's the structure that we've decided for accountability. I do recall that when we had the debate about terms of reference, there was a lot of concern about calling it, business services, and there was a lot of debate around commercial services should not all be about making a profit. It should be about delivering services, and therefore, line by line, we can generally see whether things are underspending or overspending against the, the profile budget or the profiled assumption of what revenue that service would bring in each year. And I think splitting it away, you could have a sub-split within commercial services, fine, and put all the ones that, just bring in money. They're not there to provide a service. But I think I'd find that pretty hard. Pretty much every service in commercial services is there not just to make money, it's there to actually deliver a service to the public. And then finally, I just a little bit confused on the VAT, particularly as it seems to be in the financial bit. You can maybe just explain that, because that's 99k out of the 380 underspend, as to why that's kind of a 99k underspend in the financial area. And is that all really in the financial area, or should some of that be disaggregated out to the heads of departments? So could you just, enlighten me a little bit more on that 99k that we see in the financial services cost centre, please?
Yeah, so strictly speaking, it should have been, the lion's share of it should have gone to the crematorium, and most of the rest of it should have probably gone to markets, because they're the two services that are exempt. So VAT is hugely complicated, and there's not a lot of logic to it, but basically whatever HMRC says goes. And the HMRC's pronouncement on crematorium, cemeteries, basically anything to do with death, is that it shouldn't be taxed, and therefore we shouldn't be adding VAT to our sales invoices to funeral directors or to customers. It's not seen as something that should be taxed by the government. So we're specifically prohibited from adding VAT. That's what VAT exempt means. But under the VAT rules, generally, if you're not allowed to add VAT, or you're told not to add VAT to your sales out, you're not allowed to claim the input VAT that you've paid out on your purchases. Whereas most of what the council does is either standard rated deliverable services, it's 0 rated, or it's outside the scope of VAT. For all of those activities, except exempt, we're allowed to reclaim the VAT. So last year in December, when I noticed that we were just reclaiming all of our input VAT, including from the CREM and markets. So, for example, CREM, death-related services are exempt, but also so is anything to do with land or property rental. And even one of our other big income streams is the charter market. Those pitch fees that we charge every single market day are a very temporary rental of a piece of land, and therefore they're exempt. So the 99k, so when we detected it at the end of December, we did a voluntary disclosure. We changed our practices so that we weren't reclaiming VAT, but it meant that from April last year all the way through to December, we had been overclaiming VAT. At that point in the year, we couldn't calculate, we couldn't identify it all. So we declared everything for 22, 23, and 23, 24. But for 24, 25, all I could do is say that we'll declare it as part of our year-end processes. So therefore, I accrued £99,000 charge for that amount of irrecoverable VAT that we would have to repay to the government as part of the 24-25 year.
Probably we should be putting some profile budget then there. So, because if you're saying that 99k is all got to go back to the government at some stage in the future, then why don't we have a proposed budget for it?
So I think you're testing me here. So the accrual we put, so any debt that we owe another organisation, including the taxman, at the end of the financial year, if we haven't received an invoice, the way to accrue for it is to put a charge in that year. So 24-25, I created an accrual for £99,000 that went into the 24-25 books. As you're maybe aware, you have to do a reversal of an accrual at the beginning of the following year to make sure that when the invoice comes in and you pay that amount of money, it doesn't go into the 25-26 books, because then we'll have double counted it. So the reversal of the accrual is a minus 99,000 as a journal entry, as an actual, in April to June. If we'd paid that by now, the £99,000 payment out would have cancelled the 99,000 accrual reversal, and for this year we'd be 0. So that's why the 99's in there. So and unfortunately, accruals are really difficult to get your head around.
Basically, that 99k really ultimately is going to be going to the government and not going to be something that we can stick in our reserve or spend on something else that we want to do. And that's the bit that I'm kind of going with. Also, where I think the comments would be much more if we had more comments, things like that. Because at the moment I said it started this meeting in the mindset of, oh, fantastic, we've got 380k that we didn't think we'd have. But actually, we've only got 280k, 281k, as opposed to 380k. And that's the bit where I feel as though, particularly on that point, it's a bit misleading, the impression that we've been left with overall.
Probably the greatest insult that could be thrown my way is it's misleading. I spent a whole page trying to explain the VAT, so apologies for that. Obviously, it would make it a lot easier for you if I just excluded it, but that goes against the grain of hiding it somewhere.
Where the comments, what I'm saying is, that's where, commentary really does make a difference, as opposed to just the numbers.
So that's what I tried to do, but I'll make a better attempt at it next time round. But there are some other really big numbers that are misleading. So there's a very large figure for dilapidations that are outstanding for our old depot. And that was a last year issue, but until it's resolved, the accrual reversal is skewing some of the figures for this year. So there are some positive big numbers that are misleading, and there's some negative. And all we can do is, every time it comes to a committee, and everything will come to Finance Committee, try and set out, as you say, a commentary that says, ignore that figure, or where that looks really good, it's really bad, and where that looks really bad, it's really good. And unfortunately, welcome to the world of accountancy. It's not that easy, because you're having to comply with these accounting rules, but at the same time trying to make it as clear as possible for a whole range of people that aren't all qualified accountants. So that sounds really patronised. I don't mean it to sound that, but you're right. You've hit one that looks really good news and isn't good news at all. The £130,000 budget on that same line is good news, because we've learned from what happened last year. So that really is a £130,000 expenditure budget, which will soak up this year's irrecoverable VAT. The 99,000 is unfortunately the legacy from last year, where we didn't budget for it, and therefore it's still haunting us until we make that payment over to the HMRC. Just one last point. That was why I think the report ended with me saying, in terms of the two cost centres, 7.3 of the report, the 106k finance underspend reported in Appendix B, analysed in Appendix C, is almost entirely due to a single accounting adjustment, which will disappear in the coming months. Is unrepresentative of the expected whole year performance. And even the 16k current underspend on audit fees, which also looks like good news, that will disappear as well. So I did try and say, despite what the numbers look really good, it's not going to be that great in terms of these particular two cost centres, but I'll try harder in future.
Okay, thank you. I didn't see any more hands. So, recommendation, I think the mood of the room is that we're interested in hearing the more detailed reports. I guess we can take a vote on that. So I will move that we do continue to receive full council variance explanations. All in favour? Great, fantastic. So that's what we would like. And then 8.2 is just to note. So that is so noted. Thank you very much. Let's move to item 9, section 106, receipts report.
Thank you, Chair. I would like to credit the entirety of the work gone into this report to Mostyn Coombs, who did this, but unfortunately he's away at the moment, so I've offered to present it for him. I worked with him on it, but he did all the slog, I have to say. There's 2 lever arch files that I inherited that's got, purportedly had copies of all of the Section 106 agreements probably from 2009. And I could see, after going through them once, that there were some gaps and some holes, and therefore Mostyn has been trying for the last, I think, 9 months to try and plug those gaps. by going to Wiltshire Council and trying to get copies of Section 106 agreements from him. So after having done as much as he can, and there are still some gaps, unfortunately, this is the culmination of all the work that he's done. And he's tried to, in Appendix A, he's tried to go through and give you the sort of salient details for each of the unspent amounts of Section 106. And give you the sort of facts in terms of receipt dates and how much money we've still got. And he's tried to risk rate it. And the table on paragraph 4.1 sort of explains how we came up with this RAG rating, this red, amber, green rating. But yeah, by all means, look through Appendix A and you'll reach your own judgments in terms of whether you think there are significant risks or otherwise around these. The main risks would be timing. As you're probably aware, Section 106 legal agreements are legally binding. We can't just choose to ignore them. And usually they've got stipulated expiry dates where if the council doesn't discharge its obligations by the deadline, the developer can challenge to have the funds returned to them. From my experience in other councils, it doesn't happen very often. Most developers pay this up front in order to get their planning permission, if I can be that cynical. But once they've got the planning permission and they've developed and they've moved on, they don't tend to monitor very closely their previous developments and therefore aren't usually on the lookout to see whether councils have or have not discharged their obligations. But that doesn't demean the importance of knowing that we've got a deadline and we should ideally aim to discharge our obligations by that date to make sure that we minimise or zeroise that risk of having to repay it. Paragraph 5.1 splits the amounts of money we're currently holding. Over the years, the council's had a lot more than this £927,000 that we're currently holding in 5.1, but we've discharged all of the other Section 106 agreement obligations, and this is what we're currently left with. Apologies for an error in table 5.1. I think the original version that went out had Harnham West for those top four amounts of money, and it's Harnham East. So apologies for that. But other than that, that should be a fairly accurate split. Unlike SIL, which I know is an issue, a subject that councillors are currently very interested in, and councillors may in due course design a scheme whereby you decide how SIL is spent, whether or not it's in the generating wards or whether it's across the city. That remains to be seen. Unlike SIL, though, which can be used anywhere the council wants to use it, Section 106 legal agreements clearly are very much rooted in the development and the scheme that gave rise to that. And in fact, the words around our obligations make it absolutely clear where we're allowed to spend the money. And therefore, there isn't that freedom that there perhaps will be with SIL. So it's interesting where the money's generated from, but it's much more important to know what the actual words of the Section 106 agreement say in terms of how we can discharge it. So that gives you a summary of the wards. Appendix A gives you the individual Section 106 receipts that we're still sat on. And as you can see, the first three amounts of money, because of the expiry date, we're considered to be high risk. And officers are prioritising those in terms of ensuring that we can discharge those obligations as quickly as possible. Some of the other Section 106 amounts of money are less time critical, and we've got more time to deal with those. There's some maps that have been provided to try and help the reader to understand where the money comes from. Number 7, the River Park. As you'll probably remember, this was the largest Section 106 receipt the council's ever had, and that's obviously a very recent transfer of duties of that piece of land, and that receipt represents 50 years worth of 50 years worth of maintenance, estimated maintenance costs. So clearly we're not aiming to spend that overnight. And then Appendix B tries to give you the officers, as we've interpreted the Section 106, where we think how we need to spend the money. So you've got individual receipts, some of which you can see the money's been spent or allocated from April 2025. Some have got some money remaining in the penultimate column in that table in Appendix B. And then the final column, the proposal, is how, again, officers have read the Section 106 obligations and have set out in summary how that money should be spent. If we go down to the penultimate row, on the second page of that table, Wagstaff Way, former Pembroke Park School. With that one, the officers have built in all the ongoing maintenance associated. So the obligations are around maintenance of woodland area. Mostyn and the parks team have built that into their everyday business as usual requirements to make sure they manage that piece of woodland in the same way as they manage SEC other woodlands. And therefore, because they've already spent that money on normal maintenance and they're going to carry on maintaining it, we're suggesting that 4636 money gets transferred into general reserve, and there's a recommendation to that effect in there. Other than that one recommendation, all the other receipts is set out there how we intend to use it going forwards. And there's still the final one, the River Park maintenance, still be £695,000 of that, which will last us some time yet. The only other appendix is Appendix C, where I think to demonstrate that we're continuing to spend money on that woodland, even once all of the Section 106 money goes, there's some details about the activities that we've done on Wagstaff Way at the end. And then before that, you've also got other spend that's been allocated in 25-26, again, to give the committee a better appreciation of the fact that we're not just sitting on this money doing nothing. We are trying to comply with the obligations and carry out works as and when they're identified. So returning to the recommendations, as you can see, they're in front of you. To note the current status of the Section 106 receipts and the amount therein, to note and support the proposed next steps as outlined in Appendix B, and then to approve that small transfer of £4,636 from the Section 106 pot, as indicated earlier in terms of the Section 106 pot, from there to the General Reserve. Happy to take questions.
Thank you, Steve. Any questions? I've got Matt. Oh, actually, let's go to, sorry, Ricky, let's go to you first. I know you have a specific question, and then Matt, you go.
Thank you, Chairman. If you thought the VAT was complicated, then this is even more complicated. The Pembroke Park School site, I remember, I've been the councillor there for 35 years. I don't know why Wiltshire Council used to hold on to bits of land. The site is divided into two. One was a private contractor, which looks as though the money that's been coming through, that was to maintain some trees, hedges, open space. So that was what's identified in the plans as A, and now we're being asked to take on B. You see there's another plan that shows B. It's hard to see the actual blue area, but it's part open space, and then you've got this, what was it called? It was called a nature reserve. There's no access to it. There's no access for the public to enjoy any of it, and it backs on to back gardens and back entrances to properties. So I just want to clarify something in my own mind. When we draw this remaining money down, is that it? Is there any is this annual, or is that it completed? There's no more money. This is the run that the residents have to, there's some residents, some private owners. This is what you can see, that the fence to the right is the boundary of the gardens. This is the passage to get into 3 of the houses. So you can see the growth of the trees and the height of the trees, which are now halfway over people's back gardens. So if that 5,000 is all it is, we have an ongoing increasing cost to maintain this piece of inaccessible nature reserve, which to me is, I know it's happened, we are where we are, but why would we take that on? Why would we want to inherit? We don't own either piece of land. One is private developer who went bust. So there's just Wiltshire Council handling the commuted sum, the 106. The other piece of land is Wiltshire Council. And they have played a blinder by passing it on to us. It's not housing land. It's not highways land. I don't know how it got to us, but it has. What I'm trying to say is we have this future ongoing costs. It's on a 40-degree slope. It's probably the worst piece of land you'd even want to inherit. You know, if it was ours, if we had actually had the asset transferred and not just the liability, I would say sell it, get rid of it. We don't want the liability. So I just wanted to show you, because what tends to happen, and I'm not criticizing anybody, you know, last year we put the brakes on, had to save this, and then you go for a request, the legitimate request for residents, can you cut the trees back so I can get access to my back garden? Sorry, the budget's spent. That's unacceptable to someone's back entrance. This is not a park or an open space which we can let go for a year, catch it up later on. This is someone's way in and out. When they get home from work, this is the way into their back door. There's a couple more, isn't there? I had to duck under there to get through, and I think there might be one more from the other. Yeah, one more. So you can see the trees. What's been happening is, it's I don't know how, it's a bit like local government now. It's deny. This is when residents make an issue. Can we get the trees cut back? Contact the council. Deny, deny, deny. Oh yes, it is ours. Delay, 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 and then they give up. People give up then. They're at the wit's end. So I just want to let us all be understanding that this will need tackling on an annual basis, not when we can afford it or when we can plan it in. You know, once I found the appropriate department and the appropriate officer, I said, well, let's issue a job and ticket and get it done. Oh, well, we're limited resources at the moment. We'll have to wait till winter. So you're telling people won't have access to their back door until after winter. We can't have that. We've got to resolve, I say, why we ever got it, but we have. So I just want to have some understanding if there's any money left from anywhere to help us tackle this ongoing problem. If there's not, if Steve, you're telling me that 5 and whatever's left in there is all we're getting, because usually the crafty ones, there's a commuted sum and it tapers down over a number of years and then there's nothing. And I just wondered, have we reached that point? Because this was 2012, this development happened. So we've had 13 years of growth, vegetation growth and tree growth. You know, is there any more money to come in the future? I'm not asking for any other than, can we all recognize this so that when a request comes in to have some work done, to let people get into their back garden and their back door, you don't say, well, they have to wait. We've got a budget constraints. And sorry, you know, that tree budget is spent. Sorry for rabbiting on.
So if I may, I can give you the reassurance that there is plenty of money, as you've seen from the earlier report on budget monitoring. And so you're not constrained to only use Section 106 money for a piece of land that originated from Section 106 agreement. And once that money's gone, you can't use any council taxpayers' money, you know, your general reserve. You can use your general reserve. You might even choose down the line to use some SIL money. You couldn't use capital receipts because it's not a capital asset. But, you know, there's lots of pots of money that you've got available to you to do it. So if there's a political will to do it, it will get done, is all the assurance I can give you. I'm clearly not the tree department. I believe you've got a meeting tomorrow, have you, with officers on site? So I'm sure they'll remind you of what the council's tree policy is, which I'm not an expert on, but that does look as though it's in breach of the tree policy. So if it's purely about finance, though, there is plenty of money to pay for it. Unless we're breaking the law in some way, I imagine the parks officers will help you to understand what the options are, but you're not constrained to that £4,000. Once that's been transferred, we can never do any more tree work in that area. That's not the case. So you'll be able to use the general reserve. And Mostyn told me that that piece of land and those obligations are built into his parks work schedule, which to me says that even when that money's all gone, he's still going to keep discharging our obligations under the tree policy. You've also got the bids and savings opportunity in 26-27 budget setting. We said earlier on that the budget setting process has already started. Officers are working up bids and savings, which are just ideas to ask for more money or give money back to the council. There's nothing to stop councillors putting their own bids in. You know, last year we got quite a few ideas from both the administration and the opposition party. So if you wanted to generate a political bid that says we just want to put an extra 50,000 or whatever the figure is into that specific scheme, depending on how your meeting goes tomorrow, if Mostyn or the Parks officers say that, yeah, they have got more budget this year than last year, there are no breaks on the tree surgery this year like there were last year, but if they still say it's all been committed, there's no money left, well, then you can just put in a political bid and make sure that budget goes up, even if you ring fence it purely to that scheme.
Thank you. Mac.
Thanks, everybody, and thanks, Steve, for a great report. I've just got a question about procedures for my edification. So on section 106, so some of these, so Rowbarrow, which is in some of our wards, some were in danger of high risk of having to pay the money back, and then others were not. And when is it? So first of all, my clarification is, when can money just go back into general reserves? Why is that allowed? Surely we have to pay it back, as it says here on some of them, back to the whoever spent them, whoever paid the money. So, yeah, what happens in which case? I don't know.
So, I sound like a lawyer saying it'll all come down to the wording of the particular Section 106 legal agreement. But in general terms, they're all pretty much the same, which is that once the council, so the sum is estimated in various ways, but take the river part as an example. I think Mostyn himself, a member of the SCC officers, worked with the Environment Agency and Wiltshire Council to come up with a 50-year maintenance plan. And when all three parties were content that that seemed fair and accurate, and we weren't trying to fleece the Environment Agency, but also they weren't trying to fleece us, and it would give us enough money to then use for 50 years. That number then got agreed between the parties, and a legal agreement was drawn up that said SCC will take on all of this listed responsibility, new trees to be replaced, etc., etc., in return for that £700,000 receipt. So as a general principle, and sorry, some are maintained for a period of time. Some are just put in a one-off piece of infrastructure, like some Section 106 receipts are put in a play park. Once the play park's been put in, if we underspent that amount of money, we keep the rest. There's no clause in there to have to repay or refund the developer. But similarly, if it costs more than they gave us, that's tough. We just have to then use our own money to make that up. We have got no recourse back to them because it was all agreed up front. The developers need certainty, and to some extent the councils, Wiltshire Council and SCC need certainty. So it suits all the parties to agree a figure and then just get on with it. So in terms of when do we repay general reserve, when do we have to repay the developers, we would move money into the general reserve when either we've completely discharged that obligation, like if it's a one-off. But if it's an ongoing thing, so for every year, forever onwards, we have to do it. If officers can demonstrate that that's been built into the base budget for SCC, then you can move that sum across, because you're putting more money in the long term. You'll end up putting more SCC money into doing that obligation. So as long as you can demonstrate, and then nobody ever changes that. And this is where, if politicians cut services and we stop doing some of the things that we were legally required to do, that's when officers should tell you up front, so you know the consequences of your actions. But we're not in that realm. So at the moment, there's lots of Section 106s where officers have built into their everyday schedules to continue doing that obligation. At that point, they're allowed to move the money into the general reserve. The only time we would ever have to repay the developer is, one, we haven't done our obligation, and two, the developer's found out about it and demands to have the money back. So there are some that we haven't discharged our obligations by the deadline. As soon as officers are aware of that, we try and try and speed things up. But until the developer actually demands the money back, we're going to try and spend the money, meet the obligations, and demonstrate that we did what we should, albeit a bit slower than we should have done.
Yeah. Okay. Thanks. Good.
Thank you. Sven.
Chair, thank you. Steve, thank you for that, and well done, Mostyn, having been involved with Section 106 stuff before. I know how difficult it is to extract the relevant information out of whoever that may be. being a bit parochial, Rowbarrow. We were told 4 or 5 years ago by the previous clerk, an RFO, I believe, that allocation of funds was acceptable. They did not have to be physically spent. So once the section 106 for Rowbarrow was allocated, that was good enough. That's what we were told. Whether that's now proves to be the case or not, I don't know. But that's the reason why there was no manic rush to get the money actually physically spent by the deadline. On the 4 agreements for Rowbarrow, 3 of them are at risk. Now, we're working through the community garden project up there at the moment. Within the 197 or whatever it is K budget that was originally allocated, it all came out of those section 106 pots of money. What we're being asked by officers, Mostyn specifically, is that some of that 190 odd K be kept for maintenance of the community garden going forward, which is fine. But if we're saying the money has to be spent and is at high risk now by 2021, then we can't allocate it for ongoing maintenance, can we? Or does my original statement from the previous clerk that as long as the money is allocated, if that is good enough, then we can move it from high risk to no risk? Can we? So you can't have it both ways. You can't have it, we have to spend it by this date because it's at risk, but we've got to keep 60 grand of it for maintenance. You can't have it both ways. So I need to clarify what the position. You may not be able to answer that now, and that's I'm not expecting a detailed answer now. So, but if I could make the request to have that information, please, I'd be very grateful. And the other thing, again, at least 3 of those S106 agreements make mention of infrastructure for play parks. There is only one real play park up at Rowbarrow, and we've had some discussions around that recently around maintenance because it was pretty overgrown and pretty awful. So I asked Mark whether it was on our radar, whether we were responsible for it, and he said no. So I got hold of Persimmon and their land agents, Remus, and said, "Hi, is this down to you?" And they went, "No." But in fairness to them, they cleaned the place up anyway, but it is looking a bit like it needs some TLC. So I guess my question is, if Mark has said, no, it's not in our remit to maintain and fix and put new kit in, why is there a section 106 agreement that says there's money for maintenance of the play park? Question again.
Can I just clarify? Does it specify in this report that maintenance of the play park is in here? Or is it a different one?
So if we say item 1, maintaining equipment maintaining adult and children's sport, play and recreational facilities, or installing something. The second item, to purchase new recreational equipment or improve an existing facility at Rowbarrow. Third item, improving and maintaining adult and children's sports and play and recreational facilities. So it's all sort of in there.
Yes, that's a good question. We'll have to come. So we'll come back with a more definitive answer. Okay, yeah.
Thanks, Sven. Andrew.
It was just a quick clarification on the tree policy. I know, having spoken about the tree policy to Mark, that obviously maintaining paths and things clear is a responsibility that they undertake. And they're reviewing the tree policy, and I for one have certainly proposed an amendment which will get discussed whenever it comes to committee to look at the tree policy, which is this sort of good neighbour sort of addendum whereby the council, to be a good neighbour in certain circumstances, would look to prune trees that are overhanging people's gardens to a significant extent light and, subject to people being, I think, 67 or 70 plus and not having the finances to do it themselves. Because at the moment, there is no legal obligation on the council in the tree policy to chop down trees, even if they are overhanging people's gardens.
Not chopped down, you mean
Prune, yes.
prune at base level?
Chop down the bit of the tree that's overhanging. People can do that themselves, but that's their legal right. But anyway, it's a proposed amendment to the tree policy in the future.
Thank you. I don't see any more hands, so I'm happy to move 6.1 and 1.1, 1.2 and 1.3, including the transfer of the £4,636. Do I have a second? Seconded. All those in favour? Thank you very much. It's carried. Wonderful. Thank you. Item 10 then, verbal update on accounts and audit regime. Steve, you're up again.
Thank you, Chair. And you verbal update from me, and you're thinking, oh God, you won't shut up after half an hour or so. So I'll try and keep it as quickly as possible because it's a fascinating subject. But it's really just to confirm that what I brought last time as an update, some does seem to have come to pass. So what we were being told by the Ministry of Housing, Communities and Local Government, that represents local government generally and us specifically, was that a statutory instrument was going to be laid before the summer recess, and that would then get debated in early September. And if that gets passed, then some point in September, and it could be as early as later this week or next week, it would become law. And at that point, the £6.5 million threshold, which we exceeded in terms of our turnover, which we exceeded for 3 years running, and meant that in year 3 we went from being a smaller authority under AGAR to a principal authority under SORP, that would be raised to 15 million. And immediately for this year, 25-26, we obviously fall way short of the 15 million. So we would then revert back to becoming a smaller authority again under AGAR. And we were obviously a smaller authority under AGAR all the way from 2009-10 all the way through to 23-24. And it's only 24-25, 1st of April 24, that we became a principal authority. So if we then revert back to being a smaller authority in this financial year, 1st of April 25, it means that 24-25 will be the only year that we're still classed as a principal authority. And to reassure you, we produced both AGAR and SORP accounts for that year in question, 24-25. So we've done as much as we possibly can to remain compliant, whether we're smaller or whether we're a principal authority. I can confirm that the statutory instrument was laid before the summer recess, that the 6 o'clock tonight, the Commons were due to debate this particular statutory instrument. It'll go to the Lords on Wednesday. And we could find out either later this week or next week that statutory instrument has been passed. And obviously, if that happens, we'll let all councillors know that we're back to being a smaller authority again. All of that just means that the 24-25, we're still classed as a principal authority. We're still in the position that although we produced 2 sets of accounts, we didn't have an external auditor. We couldn't attract an external auditor. So we've got unaudited accounts for that 1 year, 24-25. If we go back to being a smaller authority for 24-25, then there's a good chance that we would have our old external auditor reappointed, and they might be prepared to go, because they'll have continuity up to that year. They know that we're a known organisation that they can trust. They've never qualified our accounts. They'll always certainly charge us a little bit extra, but we might get that continuity of audit opinions, which isn't really important to most non-accountants or finance people, except that if ever we did want to go back to PWLB or get any other form of loan out, our credit rating would be affected by having at least 1 year where we didn't have an unqualified audit opinion. The only way we'll go well, the only way we'll change 24-25, because that's obviously in the past, is if the government bring in a piece of legislation. A statutory instrument won't be sufficient. So a piece of legislation that would have a retrospective clause in it. And again, I can confirm that the ministry has done that. The English Devolution and Community Empowerment Bill was introduced on the 10th of July. It's got months of debate to go, so this isn't something that's happening tonight or this month, but it could be this autumn, it could be before Christmas, it might be into next year, it might never be approved at all, but I'll keep you updated on that. The combination of the statutory instrument, if that goes through, and the piece of legislation, if that goes through, means that all of this was just a dream that we ever became a principal authority, and we'll have that continuity of being a smaller authority throughout our history. So apologies for all the disruption and the confusing reports we've had to bring you. That's the latest. But to reassure you, the earlier point made was that even if we go back to being a smaller authority, even if we have to just produce AGAR accounts in future, we will also in parallel be producing SORP compliant accounts each year, even though we won't have a statutory requirement to do so, because they give a true picture without the distortions caused by AGAR. So you will at least all of this was have caused us to realise that the accounts we were producing were a bit misleading and didn't give a true picture. So at least we've learned from that, and we'll produce better accounts going forwards.
Fascinating subject, indeed. Any questions? I have none. No? Okay, well, thank you. Thank you for the update. I appreciate that we may never have been, fascinating. Item 11 then, matters arising. There are none. So it is 8 o'clock on the button. Meeting is closed. Thank you.